Okay. It's not quite 1 o'clock. We'll give everybody another minute or so to get in here, and then we'll get started. But if there are any questions about futures that you have that you don't understand, that you want clarification on, feel free to throw it in the chat. We're going to take our time today. I want to make sure that everybody gets what they need. And if we end up going over a few minutes, as long as you guys don't mind, I don't mind. So we'll give another minute or so, and then we'll get started. All right, you guys ready? We'll start with the ones that are in here, and then if anybody else joins, then we'll help them whenever we can. All right. So I've seen most of you guys, all three of you guys around. You guys are all pretty familiar with futures, right? At least to some extent. But futures are, most of us started with options. I did. I started with options. I think everybody that was early in Oasis started with options. And then I was one of the first ones to really start moving toward futures when I discovered prop firms. I wish I had discovered them sooner. They'd been around longer. Obviously, the rules have gotten significantly better with most prop firms over times, but that's when I made the move to futures. So like options, futures are a contract to an agreement to buy or sell a specific commodity, asset, or security at a set price at a future date. So most futures contracts, index futures contracts are quarterly. So they roll over or expire every 3 months. Commodities are monthly, and they tend to be like a month ahead. So like right now, if you're trading gold or crude oil or something like that, you're probably trading the November contract. But if you're trading indexes, you're trading the December contract. About the second week of December, those contracts will roll over for indexes. And at about the third week of every month is when the rollover date happens for commodities. It just depends on what the volume is and which contract has the most volume. But futures trading actually originated in Japan in 1730 with rice futures. And then the Chicago Board of Trade was formed in the U.S. in 1848 for grain contracts for the same reason. And what that was to even out the price of these products. So what would happen is back in the day, farmers would have to drive to the Chicago Board of Trade or Chicago to drop off all their grain and whatnot. Well, at harvest season, there's a glut of grain, so the prices would go down. And then, when it's not in season, the prices would go way up. This was a way for them to even it out based on what they thought, what they thought about conditions, weather, harvest, yield, all this kind of stuff. So they did this to even out the price to make it where it wasn't so spiky and terrible for consumers and for farmers. So everybody could kind of have a win-win out of it. Now, one of the great things about futures, as opposed to trading stocks or trading options, is you can trade pretty much around the clock. You can trade, the market opens at 6 p.m. Eastern on Sunday, and it closes at 5 p.m. Eastern on Friday. So for 5 days, you've got 24-hour a day trading, except for the 1 hour that it's closed from 5 to 6 every day. But it's pretty flexible. So if you say you work a day job and you want an opportunity to trade, but it's hard to trade during your day job, you can trade in the evenings, you can trade at night. Now, if you trade in the evenings, it's going to be a little bit wilder, a little bit weirder. There's not as much volume, so it moves a little bit slower. You get sometimes a lot of consolidation. You get some different market conditions than what you usually get during New York. There is a low cost of entry to trading futures if you use prop firms. If you go your own route, depending on your broker, they're going to have different margin requirements, but we can talk about that later. There's significant upside. You can make a whole lot of money trading futures, and it doesn't take a lot. Now, the inverse of that is you can lose a lot. They are a leveraged product. They're different than options in that when you buy an options contract, you spend $100 on an options contract, you're risking that $100 and that's it. When you buy a futures contract, that thing can run against you until it's closed, and that can go a long way. So I saw a video of a guy, he got into a trade like right before some news, and he was very heavy. It was a personal account. And the news candle came out and he was instantly down like $300,000 because he was very heavy. Now, it was a personal account. He had the margin in the account to hold it, and he ended up coming back and winning that trade. But you can have some serious drawdown if you're not careful. So leverage, Ty, is you can essentially take $50 and get $50,000 worth of trading equity, or if you want to look at it, you get $2,000 worth of drawdown. So you can take that $50, or essentially it's, if you go with Top Step, it's $200 by the time you pay an activation fee for $2,000 worth of market value. As long as you don't lose that $2,000, you're good to go, and you can make plenty of money. There are some good potential tax benefits. So if you've ever traded SPX options, it's very, very similar to the SPX. Profitable futures trades on a personal account, not a prop firm account. Profitable futures trades are taxed on a 60-40 basis. So 60% of the gains are taxed at long-term capital gains. 40% are taxed at short-term capital gains. If you trade through a prop firm, you get a 1099. So you're better off to form an LLC and have all of your income go through that. That way you can trade your expenses through that. You don't have to. You can do it all on a Schedule C if you want to, but it's a lot easier and you get a lot more benefits by doing it through an LLC. And that's a different lesson for a different day, but definitely something that you should check into if you're interested. All right, what can you trade? You can trade the indices. You can trade precious metals. We traded gold in free chat last night. You can trade commodities like crude oil, pork bellies. You can trade grains. You can trade livestock. You can trade currencies, crypto, bonds, whatever you are interested in. You can trade it. You can trade crypto futures. And I know there are some people that I've seen throughout the server that they either work on farms or they work around farms or they work in industries that are related to farms. So like the grains and livestock and stuff like that, that's very attractive to them because it's something that they know and that they can relate to. You can trade it. You can trade it all day, all night, do whatever you want. There's a lot of flexibility. You don't have to be pigeonholed into NQ or ES or whatever. You can trade the Dow. You can trade YM. You can trade the Russell, which is RTY. You can trade Bitcoin futures. You can trade natural gas. You can trade the Nikkei index, which is the Japanese index if you want. I would avoid it at all costs. It's terrible. But depending on what you like, what you know, what you specialize in life in general, you can trade it. And there's a futures contract for it somewhere. And prop firms are offering more and more as the CME, the Chicago Mercantile Exchange, and the CBOT, Chicago Board of Trade, as well as NYMEX, New York, whatever, I can't remember what it stands for. As long as they have a product for it, these prop firms are making it available to you. All right, there's definitely some different terminology when it comes to futures than what you're going to find when it comes to options or stocks or things like that. If you hear someone say they're going long, that's the same as buying a call. They're betting that the market is going to go up. If you hear them say that they're short, then that means they're betting on the market going down, which is the same as a put. So you hear those fairly interchangeably. Most people are pretty in tune as to what that means, but some of the newer people, not so much. MOC stands for market on close, and that is That's actually a big group of trades that are set to close at market price at the end of the day. So a lot of like mutual funds, when mutual funds execute their trades, I was a former investment advisor. When mutual funds execute their trades, they have to do it at market close. So if they want to buy a stock, they have to do it at market close. If they want to sell a stock, they have to do it at market close. A lot of hedge funds, institutional investors, a lot of them will execute those types of trades at close, and that's what mock is. Now, that is in the past been a strategy that you could use to have some success at trading. Recently, it's not been so great, but it's something that you can look into and study. MOO is market on open. It's the same kind of deal. Some institutions are set to buy that asset at market price on open. So whatever the market price is at that particular moment at open, they're buying it, which can drive the price up or down pretty significantly the first couple of minutes, which is why you tend to see so much wiggly movement first thing in the morning. A tick is the smallest unit of measurement or movement of a futures contract. Each contract has a different tick value. Each one has a different a tick size. So if you try to trade crude oil, a tick is 1 penny. And each penny is worth $10. If you want to trade gold, a tick is 10 cents, and every 10 cents is $10. If you want to trade NQ, a tick is a quarter of a point, and each quarter of a point is worth $5. So everyone is different. They all vary wildly. So make sure that you know what that is before you get started. You hear when someone say a handle, like, hey, we're up 10 handles, that's 10 points. And that came over from a lot of the floor traders. So that used to trade on the floor, whether in Chicago or New York. When they were trading futures, they would refer to points as handles. And that's where you'll hear that. You'll hear that sometimes in videos that you watch. You'll hear it when you hear other traders talk or other traders that are live. They'll refer to points as handles. If you're trading through prop firms, these are two things you want to know: DLL and MLL, a daily loss limit and a max loss limit. So a daily loss limit is the amount you're allowed to lose in any given day. A max loss limit, that's the maximum you're allowed to lose before you blow the account. If you hit that max loss limit, the account is gone. You'll have to start over. A daily loss limit means you're just done for the day. Flatten means to close out a trade. So on some interfaces, you'll see flatten all. That just closes your trade or closes out all your trades across the board. If you want to do a join ask, that's you're buying at the nearest lower price, and join bid means you want to sell at the nearest higher price. So it's typically going to be a tick or two. So depending on what orders are on the ledger on the DOM, that will determine your ask or bid entry point if you decide to use those buttons. All right, risk management. Micros versus minis. Most traders are used to trading minis. So NQ, you'd be trading minis. ES, that's minis. YM is minis. The micros would be MNQ, MES, and MYM. And the benefit to trading micros is they cut your risk by 1/10. So one micro contract is worth 1/10 of a mini contract. One mini contract is worth 10 micros. Now, that can vary across some products. Silver is one of those products that's a little bit different. Micros to minis aren't 10-1. They're like 5-1. And there are a few others. So make sure if you're trading something new that's new to you, you find out from someone, you do a Google search, something, you find out what the micro to mini scale is so that you can manage your risk. If you want to make sure that when you're trading, you risk no more than 1% of your portfolio value on a trade. So if you have a $50,000 contract, you want to make sure that on any given trade, you're not risking more than $500. I would recommend, until you have a buffer in your account, that you risk closer to $250 per trade, and you let it build from there. If you can do $250 per trade, typically you're going to get a 2-to-1 return, at least on that. My average is a little over 3-to-1, but a 2-to-1. So if you risk $250, you're going to make $500. Now you're going to lose sometimes, so that's why you want to make sure you're only risking $250, because If you have an 80% win rate, if your first couple of trades out of the gate are losers and you trade too heavy, you're going to blow your account, and you don't want to do that. You can have a 90% win rate and do the same thing. Personally, my win rate's 77%. So I can't afford to trade too heavy right out of the gate. I got to make sure I get some buffer, and then I can add some size as my account grows. I have already talked about this. I mentioned it several times, but know your instrument. It's very, 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 very important that you know your instruments. Tick values are important. News releases related to whatever you're trading are important. And when does that instrument settle for the day? For example, we've talked about tick values a lot, so I'm not really going to cover that anymore. But news releases, if you're trading crude oil, the crude oil inventory comes out every Wednesday at 10:30 a.m. You have to know that. It doesn't affect any other market at all, but it does affect crude oil, so you're going to want to know that. And you need to make sure that you're well positioned or out before that news comes out. And each one settles at a different time of day. So when you look at a lot of commodities like crude, gold, silver, stuff like that, they settle on London close, which is at 1:30 p.m. Eastern. The indexes in the United States, at least the NASDAQ, ES, and YM, they settle at 5 p.m. The Nikkei, it settles at like, 8 a.m., 7 a.m., something crazy like that. So you just need to understand, if you're trading something, you need to know when it settles. And what settlement means, when it settles, the volume is going to drop off significantly. The difference between MES and ES, so ES, 1 ES is worth 10 MES. MES is the micro, so it's 1/10. That one's pretty standard, and that one, that's good to go. So ES per tick is $12.50. MES per tick is $1.25 per tick. What strategy should you use? That is entirely up to you. That's one of the beauties of trading futures. You can really use any strategy. It's more important how you manage risk. So you can use supply and demand, support and resistance, like Champ and Brit do. They do a lot of supply and demand, support and resistance. You can use EMAs like Oakley. You can use ICT smart money concepts like me or AMain, or you can use data like Lips. It doesn't matter. Whatever strategy makes you feel most comfortable and you prefer, then by all means use it. The key is just going to be managing risk. Entries and exits are extremely important on futures because it's pretty unforgiving. If you're going to get in late and chase a trade, don't go in full size because your stop is going to be probably a mile away. And if you try to trail your stop too close, you're just going to get ticked out for it to run against you, or run your way, and you're going to miss out. So you're going to take an unnecessary loss, and you could die death by 1,000 paper cuts if you trail your stop loss too closely. Does that make sense? That's why I don't trail my stop losses very often. I tend to get ticked out, and then it runs off, and then it can mess up your psychology, which is another whole bag of worms, and that nobody really wants to deal with. How to get started? You can get started with a personal account. You could use a prop firm account. Each prop firm does have their own rules. We're going to talk about some of those here in a minute. Each prop firm has their own payout policy. We'll talk about those here in a minute. And if there's one you have questions about, feel free to ask. And if I don't know off the top of my head, we'll look it up real quick. And each one has different pricing. So a lot of variability when it comes to prop firms. Personal accounts, if you're just getting started and you've never traded futures, I wouldn't recommend using a personal account because that is going to be a lot of risk that you're going to have to deal with. And I wouldn't recommend it to get started. You can get started with a prop firm. Say you buy a Lucid account. All right, it's like $80. You don't pay an activation fee. You're $80 all in. Even if it's $100, whatever, $100. $100 all in. All right. If I put $100 into an options account, I'm going to have a hard time really getting that to grow over time. However, if I put $100 into a futures prop firm, and you have to think about it like this, guys. So many people want to try to get to the point where they're making $30,000 a day off of a prop firm account, and you have to scale to that point. You don't start off that way, at least not usually. But you're $100 all in. All right. So now I've got $2,000 worth of equity in my account because I passed my combine, my evaluation, and I'm funded on a sim platform. So prop firms have two different levels of funding. You have your evaluation period, which you don't get paid for. It's just to prove that, yes, I can make money on this and you should pay me to do this. The next round is sim funding. So simulated funding. It's still simulated markets. Your books or your orders aren't being put on the ledger or anything like that. They're just sim orders, and they're filled based on the real order books. And you can make money that way. Prop firms will still pay you out that way, but they do have limits on how much they're willing to pay traders out, and they do vary. So you're going to want to make sure that you understand what the lifetime payout cap is or what the annual payout cap is. Some of them are a little bit different there. And know kind of where you're getting close to those. But then after you prove that you can do it on sim funded, most prop firms, almost all of them now, have what they call a path to live trading. And now live trading is when you're actually in the live market, you're trading against other live traders, the institutions. It's not any different in terms of the charts that you see. All of that information is still exactly the same, and your executions should be the same, but now you're actually in the live market. It's actual real money. And prop firms usually have some kind of benefit to being in live. Like some of them offer daily payouts if you make it to live. So you can take out whatever you make every day if you want to. Some of them have actual bonuses that they'll pay you if you hit certain milestones in your live account. So, prop firms offer a lot of benefit for very, very little expense. It's so you put $100 into your Lucid account. Say you take that, and in a couple of weeks you're going to pay out. I think the max payout for Lucid, your first payout is $1,500. All right, you do that in a week. All right, you make $1,500 first week. I don't know what it is the second time. Maybe it's $1,500. I just started with them, so I'm just using them as a terrible example, but it is what it is. We'll use Top Step. $200 all in, because $50 for your combine, $150 for your activation fee, $200 all in. I got $2,000. I'm trading with it. I get it to my account value to $10,000. With Top Step, I can take out half my account value in a payout. Now, their max payout is $5,000 per account per request. So 50% of my $10,000 is $5,000. That's my max. I take it. I've now turned my $200 into $5,000 in a week. The next week, you don't even have to trade as hard. You just make $1,000 a day, and you're back to your $5,000 goal. Once you take 5 payouts from Top Step, they move you to live. Most traders will blow those accounts before they get to 5 because they don't see the benefits in going live. Personally, I'm probably going to let my next round of accounts just go to live, because why not? So they do have good milestone goals, but that just goes to show you how much you can scale with very little expense. For example, a couple weeks ago, I bought 5 Top Step accounts, passed them, activated them, I'm $1,000 in on my 5 accounts. Within a week, I turned that into a $20,000 payout. So I turned $1,000 into $20,000 in a week, because prop firms allow you to scale with very little expense. That's just the benefit of it. They're fantastic. I like them. The leverage you get is far beyond what you could do in a personal account. But there are some other benefits to personal accounts. Like, you're not a 1099 at that point on a personal account. You can hold trades overnight, which you can't do with most prop firms. They don't allow you to swing trade, all that kind of stuff. But they do have different rules and different offerings. So some prop firms have multiple offerings for even just straight to funded or evaluations. Like Tradeify, they have straight to funded, then they have a growth account, and they have an advanced account. Well, which one is going to work for you? If you're brand new, don't do straight to funded. You're just going to waste that money. There's no point in doing that. Get an evaluation account, and with Tradeify, I would get a growth account versus an advanced account. And the reason for that is the advanced account has what they call live trailing drawdown. We'll talk about that here in a little bit, but those are the kind of things you want to understand when you're purchasing evaluations, because if you see like a whole list of different types of products other than 50K, 100K, 150K, they'll say 50K growth, 50K advanced, 50K straight to funded, 50K this. You need to really pay attention what the differences in those rules are, because they're going to make a big difference in how you can trade. Consistency rules. People get confused about consistency rules, and it's really much simpler than you think. So a consistency rule means that you're out of your total amount that you make over a payout period, it can't be over a certain percentage. For example, if you make $1,000 and you have a 20% consistency rule, that means that no one day can be more than $200 out of that $1,000. If it is, you have to wait until that consistency target is met. So say like you have $1,000, but one of your days was $500. Well, that's 50% consistency. You're going to have to either get another $500 day to help even that out a little bit, or you're going to have to trade for a little bit longer. So if you got $1,000, you make $500 as at 50%. If you make another $500, all right, now I've got two $500 days. My biggest day is 33% of my total. That's a lot closer just by doing that. So you have to kind of work those a little bit. For me, if it's less than 35% consistency, I don't want anything to do with it. 20% is just too narrow and really kind of handcuffs you on bigger days. And the way that I tend to trade is I'll have a $200 day, a $300 day, a $7,000 day, a $4,000 day. It's kind of all over the place. So 20% consistency doesn't work for me. 35% is much better and it's much easier to manage. So that's what I look for. Some firms have 40% consistency rules for payouts. So just make sure you know what those consistency rules are and how to navigate that, and make sure that you're aligning with that when you request a payout or you're trying to request a payout. Once you activate a combine on Top Step, does it still bill you monthly? No, it does not. Once you pass, you do not pay them anything else other than your activation fee. That's it. Yeah. And that's the same with every prop firm. They're the same way. You pay for your evaluation. Once you pass, you don't pay them anything else other than maybe an activation fee, depending on which prop firm it is. So some prop firms do not allow you to trade news. If you trade news in your funded account, they will deny payouts. You will have to find out, because it varies by prop firm what they consider to be trading news. Most of them, Top Step doesn't care. You can trade through anything on Top Step, because the way they look at it, they were founded by pit traders. They were the first prop firm actually that was ever formed anywhere. They were former pit traders, and so they figure, hey, trading news is part of trading. Get to it. Either make it work or don't. But a lot of the other ones, they do it to try to manage their risk on their side, not to manage your risk, to manage their risk. And so they don't allow you to trade within 2 minutes of a large news release. And most of those news releases are going to be like CPI, PPI, FOMC, NFP, stuff like that. And they'll have a list on their website that'll tell you what you cannot trade. Yeah, Lucid's pretty similar in terms of rules to Top Step. They're very, very similar. Prop firms, another one that they will vary on is the number of accounts you're allowed to have. So Top Step, Lucid, and Tradeify allow you to have 5 accounts. Apex will allow you to have 20 accounts. Alpha will allow you to have 3. My Funded Futures will allow you to have 3. Trade Day is either 5 or 7. But they all have different numbers that they'll allow you to trade. And I do not trade on Apex, personally. I'm not a huge fan of, and the reason for that is the next point: live trailing drawdown versus end of day drawdown. So live trailing drawdown is evil. And Tradeify has it on their advanced accounts, which is why I don't use their advanced accounts. Not a huge fan of live trailing drawdown. It is meant to make prop firms money. And what it does is, say you get into a trade. All right, I've got my stop loss at $250. I have my take profit at $1,000. All right. So it goes up to $900. It doesn't hit my take profit. It comes down, it hits my stop loss at $250. Well, I didn't, according to them, I didn't lose $250. I lost $1,150. So that's live trailing drawdown. It'll tackle you pretty good. So end of day drawdown would be whatever you actually lost on the account by the end of the day, or made on the account by the end of the day. So on that same trade with end of day drawdown, I lost $250, but with live trailing drawdown, I lost $1,150. My balance didn't go down by that much, but my drawdown, because the 900 that I didn't take profit on, they consider that lost. Yeah, that's why I don't use Apex. That's why I don't use Tradeify advanced accounts. Any kind of account that says live trailing drawdown, I don't use that. It's just that's just a level of difficulty that I don't think anybody needs. Now, you can do it. There are strategies to manage it and strategies to do it. They're not. That's not how I trade. I like to get in my trade and hold it, and get to the level that it needs to go. So, like the last trade that I took today before I left to do this, we got in. I moved my stop to break even. It came back, and I was up $300 and something, and it came back and stopped me at a break even. So that $350 would have gone against my live trailing drawdown on Apex or Tradeify Advanced or those types of accounts. So not a huge fan of that. But if you like to take profits quickly, by all means, you just have to take more trades in a day to pass and make money. Yes, good call, Singularity. I didn't catch that, but I was eating lunch. Payout rules can vary pretty widely across prop firms. Top Step, like I mentioned already, has a maximum payout per account, per request of $5,000. Tradeify and Lucid are like $1,250 for your first payout. Something different for your second payout, and third payout's different, fourth, but they go up, but they're different. Alpha has a $15,000 limit per payout request per account. Apex is different. My funded futures is like $1,200. Those are the ones I know off the top of my head. So those are the what's going on here? You guys hear me okay? I don't know what's going on, guys. I'm sorry. But payouts, there, it should be better. Is it better now? Oh, why is my Wi-Fi must be acting stupid? All right, well, I'm recording it on my end, so worst case, I'll give you guys a link. But payout rules can vary widely. Just make sure that you know what those payout rules are and whether or not you qualify. Most prop firms have a dashboard that'll tell you how you're doing, how you're performing against their metrics, and that way you can see at a glance every day when you get started or at the end of each day when they aggregate all the data. Most of them do it in real time now. Some of them don't. Top Step kind of does it in real time. Lucid does it in real time. Tradeify does it at the end of the day. Alpha, they do it kind of at the end of the day. So, you can see how you're doing when the day starts, when the day ends. Okay, here's where I am toward my payout goal. Here's what I'm doing. Here's how much money I can make. Here's my consistency is at 35% after 3 days. So doing pretty good. I should be on track for payout. Or, my consistency is really out of whack because I had a really big day. Don't shy away from big days just to meet a consistency rule. Man, put that money in that account and let that be a buffer. Wait on the payout if you have to, but put that money in there and stack it. Don't let some consistency rule force you to take only $200 or $300 a day. Get out of here with that noise. Pack that money in there. Take advantage of the opportunity that you have because, you're probably going to get a bunch of small days again anyway. Yeah, exactly. I'm not going to do that either. Straight to the dollar. Some prop firms are straight scams. There are new prop firms that come out every day. Some of them are straight up scams. Stay away from them. Don't go near them. Just stay away. The ones that the prop firms that I personally like to use are the ones that use Project X. So if they use Project X, I'm a huge fan. If they don't use Project X, I might still like the firm, but I'm not using them maybe right now. But if they have Tradevate, you can trade that on TradingView. You just have to go into your Tradevate settings. You have to jump through a couple hoops, click a couple of buttons, and then now you can connect it to TradingView. You go to TradingView and log in, and bam, you're good to go. And you can trade right on the TradingView chart and have all your TradingView indicators and all that stuff. You don't get the TradingView indicators when you use Project X. I don't use indicators, so it doesn't matter. But if there are indicators that you like to use, maybe you want to consider using Tradevate and doing it on TradingView. So, but if there are a lot of prop firms that are just straight scams, avoid them. Don't go near them. If they haven't been around for at least 6 months, just don't even try them. Unless you have the money to throw away, just don't do it. A lot of them are coming in from the Forex side, and most Forex firms got banned in the United States because they were so scammy. The government said, no, you guys can't do that here anymore. You suck. So then they decided, okay, well, we'll open a futures prop firm. Well, right now there isn't really any regulatory body over prop firms, futures prop firms, even though I do suspect that is coming just because of the proliferation of prop firms. I think that there's going to have to be a governing body that oversees some kind of regulation. And that is why Apex, of all places, actually came up with a path to live. The way that they used to do it, they didn't move anybody to live trading. They would find every reason in the world to deny a payout if you got a huge payout and then ban you. Or if you made too much money and they paid you out, they would ban you and you couldn't trade with them anymore. But now they have a path to live. So if you take a certain number of payouts, certain amount in payouts, you go to live. That's how Apex does it. Top Step, if you take 5 payouts, you go to live. Lucid, I have no idea what their path to live is. I think it's similar to Top Step. Tradify, I think it's 5 payouts and you go to live. Alpha, they have a path to live. I'm not sure what it is. But the best prop firms, the ones that I would personally recommend, are Top Step, Lucid, and Tradify, and Alpha. Those are the 4 that I'm personally using, and they've been around for a while. I like them. Like I said, Top Step was the very first one. They've been around the longest, and they set the tone for everybody else in the prop space, if we're being honest. They're the company that actually created Project X. They started Michael Patak, the CEO of Top Step, started the company to create a new trading platform for Top Step, and now everybody has it because it's the easiest platform to use. But I'm not a huge fan of Apex because of the live trailing drawdown. But there are a ton of prop firms. If they're new or you just haven't heard of them before, sit and watch them for a little while, and you'll find out. Because prop firms go bankrupt all the time. Last year there was a prop firm. They were making all kinds of noise. Fast Track Trading, making all kinds of noise in the space. Oh man, they were the first ones to offer straight to funded accounts. And yeah, we're going to change industry. We're going to do this. We're going to do that. Yeah, we're making all kinds of money. And what they were doing, they weren't making any money. They were taking every dollar that they had and paying it out to affiliates to try to keep people coming in. And then it all blew up, like just overnight one day. They were on Twitter X all the time talking about how great a company they were, and people were pushing them. And then suddenly the affiliate payments started slowing down, and affiliates were like, hey, what's going on? And, oh, no, everything's fine. It's just, we're changing payment providers or whatever. And then like a week later, boop, nope, filed for bankruptcy, see you, bye. And it's a big mess. You don't want to be caught in a mess like that, especially if you have, if you can afford to lose the money, all right. But if that's the only prop firm you were trading with and you had a good account balance and they disappeared, that'd be devastating. So stay away from the scammy ones. Stay away from any of the newer ones. Just make sure. Oh, can you guys hear me? Ty can't hear me. Okay, Singularity hears me. Good. So stay away from the newer ones. They're really just going to try to take your money. They're not there to help you. And here are some stats. I point these out all the time. And I took these from Top Step. They have some updated stats since this one. And I haven't put this in here, but out of every 100,000 people that attempt a trading combine, 18% pass. So they got to a SIM funded account. 4% of those actually reach a profit split or payout. So 4% out of the 18%. So 720 out of 100,000 people that start a trading combine get a payout. That's not number of combines, that's number of people. 0.72%. If you take a payout, that puts you in the top 1% of traders ever, because most people never take a payout. The key to taking payouts from prop firms is not to try to hit a home run with every trade. It is not to oversize and try to boost your ego. It's to manage your risk. The whole idea with trading with a prop firm is to manage your risk. You're doing it so that you don't have to lay out $50,000 in a personal account in order to get the same kind of return on your own account. So you're avoiding the risk that way. You need to try to avoid it. And when it comes to taking payouts, if you make 1% of your account value per day on a $50,000 account, that's $500. Just on that one account. If you keep making 1% a day and you grow it by however, the same 1% each day. So the first day is $500, the next day is $505, so forth and so on. It turns into an insane amount of money in a year. So don't try to just hit home runs. Don't try to be all crazy oversizing and trying to get gains you can take for screenshots to share or whatever. That's all some ego BS. I hate that stuff. It drives me insane. That has caused the downfall of more traders than anything I can possibly think of. Manage your risk, because that's the only thing that you are guaranteed. When you get into a trade, when you set that stop loss, that's the only guarantee you have. You're guaranteed not to lose more than your stop loss. You're not guaranteed to hit your take profit. You're not guaranteed to hit any trims along the way. You're not guaranteed anything else. You are guaranteeing your risk. So if that stop loss, if you put it in and you're like, okay, I'm going to trade 5 MNQ. Okay, well, if that 5 MNQ puts you at $500 worth of risk, that's as high as you want to be. You probably need to size down to 3. But 5 is $500 worth of risk. If you lose 4 trades in a row at $500 worth of risk, you've just blown the account. Now you got to do it over again. And here's what happens to most traders. Most traders don't know how to take a loss. So when they take a loss, they're like, I got to get that money back. I got to get that money back. Instead of trusting the process that it'll work over time, we tend to over leverage and over trade and jump right back in. And I got to get it back. I got to get it back. That's how you blow accounts. That is absolutely how you blow accounts, and it will serve you no purpose whatsoever. What you can do is, as you get some equity in your account, as you grow the account, you can start to size up a little bit. As you and there are some days where you're reading the market really well. Man, take advantage of it. Size up. But on days when you're iffy and you're kind of like, man, I'm not really sure what's going on here, size down. It's not a contest to see who makes the most money, because if you blow your account, nobody that you were bragging to is going to come pay your bills for you. They're not. You are the one that's responsible to pay your bills. You're the one that's responsible to change your life. You're the one who started trading for a particular set of goals. You're never going to attain those goals if you can't manage risk. That is the whole key to trading futures. I don't care what somebody is doing in some chat or on Twitter, on YouTube, whatever. Patrick Whelan, for example, biggest trader on YouTube, he trades live every day. He's like 30,000 views a day on his YouTube lives. That guy has blown more accounts than anybody I've ever seen. He does not make his living from trading. He makes his living from affiliate deals and from YouTube views. So don't get sucked in to a lot of these people online that are trading, and they're trading with a lot of size, and they're trading with some out of control risk management. Because if you do, you don't have the income to match to buy all the combines and activation fees that these guys have. You know, Patrick Whelan he was a Top Step affiliate, and they fired him because, and this is a fact, you can go back and find it. There's actually a lawsuit pending right now because they're suing him for disparagement. They fired him for faking results on live streams. He was trading a practice account, and he said it was a funded account. They also disclosed that he had more resets than anybody in the history of the company. You know, just on and on and on. So don't believe everything that you see online. Don't buy into these people that are, I'm the best, I'm this, I'm that, shut up, whatever. Manage your risk. Change your life. Be the trader that you want to be. Take things where you want to go. All right, I am going to share my Project X screen and get off that little rant here. My bad. I'm really passionate. I want people to succeed, and I want people to do really well. What I don't want is to see people buy into a bunch of scammy garbage and blow their accounts up. That drives me insane. Okay. There you go. All right, you should be able to see my screen now. Okay. So this is Project X. I don't have a practice account because I don't have any combines, and I can't have a practice account if I don't have a combine. So I'm not going to take a trade, even though I'm tempted to go long right here. But this is what it looks like, and this is your order execution panel. So I'll drag it over here. It's in the screen. Maybe we'll just make as big as it's going to get. Okay. But this is order execution panel, and if you look at it, you've got the number of contracts right here. You can change those. I'll buy 1, I'll buy 5, I'll buy 10, whatever. Buy, that's when you want to go long. You click buy. You want to go short, you click sell. If you're already long and you want to trim a contract, you click sell. If you're already short and you want to trim a contract, you click buy. Join bid, like I talked about earlier. This will get you into the next highest price. Join ask will get you into the next lowest price. Flatten all, obviously flattens everything all over any accounts that you're trading. It gets you out of everything. Cancel all will cancel any pending order. So if you right click and you do like a limit sell, if I hit cancel all, it comes off my screen. So that's the order. There we go. That's the order panel, and that's how that works. Now, you can do different order types. So if I do a limit, all right, I can put my limit price in that I want to. I personally prefer to right click on it if I'm going to do a limit buy or limit sell. I don't usually type it in here. You can do a stop market. A stop market is if it gets to that level, it will execute that stop at whatever the current market price is. You can put a trailing stop in. So you can say, okay, total distance for my trailing stop is going to be however many ticks. I don't do that because I don't like to trail things that closely. That's not how I trade. But it's an option for some of you that like to trade that way. For me, I generally get in on market orders. Occasionally, like I did take a limit order today. I was proud of myself. And it did go up and hit my TP, my first TP, but I didn't trim there because I thought we would go higher, and then we ended up not. So I should have taken it there and you know, gotten back in down here and managed some risk, but you know, it is what it is. Typically, when you guys see your screens, whether it's on TradingView or Project X, it's going to look like this. I'll clear all this crap off here. It's going to look like this. You can change your time frames, all that stuff, but you can change your layout. Even if you just go to regular TradingView, you have to pay for an upgrade if you do this on TradingView, but you click this X, you can get all kinds of different layouts here. All right. And this is the one I go with because I use ES, MNQ, and YM together to try to determine which direction the market wants to go. And you know, we came down, we swept these lows. Everybody swept lows. We don't have any kind of divergence. I guess we do down here. YM left these equal lows down there on the 15. But That's why I do that. That's how you do that. Obviously, there are a lot of trading tools that you can use, lots of things you can add. You got boxes, and if you want to be fancy and be like, oh, I want to track my long position here. Okay, I'm gonna get in here, and that's gonna be my stop. Yeah, you can do that. I never use this stupid thing because to me it's just added work. But if you want to do it, you can see what your risk to reward ratio is 1.79 there. If I got in there, and 2 to 1 there, so that's 2 to 1 risk to reward. I'm risking 1 to gain 2, and it just gives you at a glance. It gives you some instant feedback. So if you like to use it, you can. A lot of streamers use it. Personally, I don't. I mean, everybody's watching my screen anyway, so it's kind of whatever. But what questions can I answer for you guys? What did I leave out that you need to know? Your TP and stop loss, just like Champ. Okay, so I will get into 1 micro here for this example. All right, so I'm in this trade. I'm long. I'm going to set my stop loss. I'm going to click it and drag it down there, and I'm going to click it and drag it up here. And that's how you do it. Or if you want to trim, like if you had multiple contracts, you say, all right, I want my ultimate TP to be all the way up here, but I want to make sure I trim 1 when it gets to here. You right click on it, go to limit sell 1. So when it gets there, it's going to trim that contract for me. Now, since I only have 1 contract, it'll actually close this bracket out. So that will disappear. And excuse me, and that won't be a problem. Excuse me, I started coughing. Did I answer your question, Zach? Excuse me. Okay, good. Yeah, it's the same way with Lucid. It's the same way with Tradeify. Anybody on Project X, it's all going to be the same. So if it's a different platform, obviously it can be different. But on Project X, that's what it's going to look like. I need to get out of this trade. I'm losing $15. I'll go bankrupt. Yeah, so any of them that use Project X. So Top Step, Lucid, Tradeify, Alpha, Trade Day, man, a whole freaking ton of them that use Project X. That's how you do it. It's the same for all of them. It depends. I don't. So Champ is probably doing the limit orders, right? For his. Just depends. They're both the same. Limit order actually will give you less slippage because it's placing a limit order at that level. When you use when you drag the brackets, those are actually stop market orders. So they're executed a little bit differently. You get executed at market price at the time that the candle hits your level. So just a matter of what you're looking for. You might get a little slippage with the market, but it can go for you, it can go against you. I've had it go both ways. Where the real value, guys, and prop firms comes in is when you copy trade accounts. So if you look here, I made $800 today. I'm copy trading it across 5 accounts. So I actually made $4,000 today. It's not a bad day. It's more than I used to make at my job, that's for sure. So, when you extrapolate that across multiple accounts, my goal is to get to 50. I'm at 15 right now. That's a lot of money. So, once you start to get comfortable with trading futures and you start to take some payouts, take some of that payout money and add some accounts. You don't have to try to get 100 accounts right out of the gate. Just add a few, and let it grow for you and compound for you. And it makes it a lot easier to have big days when you're going across multiple accounts rather than just trying to get it all on one account. That doesn't make a lot of sense. Any other questions? All about futures, Sawyer. Everything about futures, man. We went into the depths of everything. I recorded it, so I'll post a link in here for you guys. Okay, good. You have passing combine. Yeah, I tend to pass mine in 1 or 2 days time, but what are you stuck on? Are you like, how fast are you blowing it up, or is it just taking a long time to pass? And yes, Jeremy, I use ICT concepts for gold trading during Asia. Yeah, there you go. Take it as it goes, man. You're managing risk. That's okay. Do not try to measure your success by someone else's. Measure it against your own rules. I saw a video last night or this morning. Another trader was talking about, hey, you need to reward yourself and punish yourself based on how you trade with your rules. So you can break a rule and have a winning day. That's not good. You need to go do some push-ups or something. You can have a losing day and follow your rules. That's okay, man. You did all right. Go get some ice cream. Find a way to reward yourself and or punish yourself accordingly so that you can make sure that you're more focused on following your rules and following your system than you are on what the P&L says at the end of the day. Yeah, it is an atomic habit, Sawyer, for sure. It's a good book. I had that book for a long time, man, like 15 years, close to it. Yeah, it does. It requires a lot of focus, singularity. It's all right. Nothing wrong with that, Jeremy. Take as much time as you need, brother. I'll be honest with you. The traders that take the longest to pass the combines tend to be the ones that hold on to their funded accounts the longest. So, like, if you have that combine for a long time and you haven't passed it yet, that's okay. You haven't blown it up either. You're doing just fine. Yeah, Zach, blowing a funded account is very frustrating. Very, very frustrating. But you have to not let it be, you have to not beat yourself up too bad about it. You just have to accept it. Okay, yep, I had a rough day today. Here's what I did wrong. Or maybe you didn't do anything wrong. Maybe you followed all your rules and it's just the random distribution of market that went against you and you lost several days in a row. Identify that if that's the case. It happens. But yeah, it can be tough for sure, blowing accounts. It sucks. Yeah, it's interesting. You have to get used to being uncomfortable if you want to be, and that is one of the concepts that's mentioned in Best Loser Wins. You have to get used to being uncomfortable. Yeah, you pass the combine. We hit 3,000 depending on the prop firm, but with Top Step you can only make 1,500 in a day, so 3,000 total. Lucid, it's 3,000 you can pass in one day. Tradeify you can pass in a day. Yeah, no problem, G. Have a good one, man. It depends on the prop firm, Ty. So each one is different. With Top Step, those easiest rules, you just have to have 5 days of $150 or more, and you can request a payout, and you can take up to half of whatever is in your account. But if you do, you lose almost all your drawdown. You only have whatever you leave behind, and your cash balance as your cushion. See, Zach? So what I like to do is on a $50,000 account, I like to make sure I have at least $4,000 before I take a payout. And I'll take half, and that leaves me $2,000 behind. That's how I do it. Because you got to leave some cushion behind. Or if you want, you get to 3,000, you take 1,000, leave 2,000 behind. You know, if you need the money, take the money. But you want to make sure that you're able to trade in the future. You don't want to blow up your account by, all right, I've got $750 in my account. I'm taking out $375. Now your cushion's $375. Man, get out of here. That's not going to go anywhere. You're going to be trading one micro forever to dig out of that. Yeah, at 150. Yeah, right. I mean, if you don't need the money, if it's extra money for you, then let it be extra money. Nothing wrong with that.